present here and welcome to today's event. The Finance Minister presented the Union Budget with the theme Sabka Vikas, stimulating balanced growth of all regions. In today's event, our CIO Mr. Sunil Damania would break down the critical elements of the budget and also share actionable post budget investment strategies to help you navigate the road ahead. Before I hand it over, I would like all investors to know that all our offers are ending. The lowest webinar prices. We're giving you 2 years free on 16,999, which is for 1 year. So a total of 16,999 for 3 years. If in case you've not used the offer to actually extend or even subscribe, you could use this. The offer is just available below the video. Over to you, Mr. Sunil.
Hey, thanks a lot, Jason, and very warm welcome all of you. Normally, Saturday, we leave it for your family members, but today, unfortunately, the budget was there and we had to be in front of you. So please convey my sorry to them, your family members, that instead of you going out and doing some other things, you are in front of your laptop, TV, or whatever maybe to watch this webinar. So I don't know how you have perceived this budget. Is it good? Is it bad? What it is actually? If you ask me, normally we all expect budget to be like a masala movie. There should be thrill, there should be excitement, there should be some drama kind of stuff. And eventually this budget turned out to be like an art movie. If you read the budget and if you go through the documents, it is a very powerful, meaningful message to take India from developing economy to the developed economy. I think it is focused on the things which needed, instead of focusing on the upper layer, I think it's trying to take the root cause and try to see how basically can we move up in the value chain, make India Atmanirbhar, and actually address the issue that was needed. Of course, you may disagree with me, and of course, we will discuss that disagreement. We can discuss once the question answer opens. Before I go in little detail, just a small disclaimer that this webinar is just to enhance your understanding about the equity market and the budget analysis. Please consult your financial advisor before buying or selling any stock. Please note that this what we call equity in investment markets, investment in equity market is subject to market risk, and past performance no indicator of future returns. And by any way, if I'm suggesting any company in this presentation, it is just for the academic purpose. It's neither a buy or sell from our side. With this, let me just say, I think we all got a hint when Prime Minister Modi put a tweet. What did he tweet before the budget? I pray to Goddess Lakshmi to shower the poor and middle class with blessings. If you remember, somehow Modi has a habit of giving some indication to the investors every now and then. I distinctly recollect somewhere in 2014-15 he mentioned about where he gave a hint that capital gain should go up on the equity, and he said why some privileged people should pay no tax on the equity capital gain, long term gain, and it happened. Somewhere in the House of Parliament, he mentioned that PSU companies are looking very attractive, and rest is history. All PSU companies moved up significantly in 2 years. And today, before the budget, he gave a hint that we should expect something significant coming for the taxpayers and for the investors in the budget. And of course, what it has come, everyone knows, but for the benefit of others who don't know what would happen. I was discussing with one of my colleagues today, not today, yesterday actually. I expect this budget speech to be the shortest as compared to what used to happen. Previously, our budget speech used to be like a Hindi movie. 2-2.5 घंटे का मूवी होता है ना, वैसे वो स्पीच होता था. This time, the budget speech is like an English movie. 75 minutes to be very precise, the budget speech got over. And that's how it should be. You focus on what is needed rather than, discussing blah, blah, blah. And there are a lot of things that have been mentioned in the annexure which people can go to that. So I think the essence need to be conveyed to the budget speech, and that's exactly what has been done. If you ask me, it should not last more than 60 minutes. It's like a documentary. Am I right? Even not like an English movie. And hope that trend which we have seen 140, then 160, and I believe in 2020 that 160 minute speech, there was a health related scare also with the finance minister. And then we realized that, doesn't make sense to, go more than 2 hours, maybe almost 2 hours, 40 minutes. It's unnecessarily. So I think I'm happy that this has happened. I wish, and the reason I'm talking about the speech, the duration of the speech, just to convey that how precise and concise the budget speech was and the message behind that which has been wished to convey in this budget. So I'm happy it's a 75 minutes only, and I hope when I come in front of you in 2026, it should be not more than 1 hour, and that's how it should be. Let's try to understand what was expected from the budget, and has it ticked the has it delivered on that budget expectation or not? We all knew that there is a stress on the consumption side, especially on the urban side. Because of inflation, everyone purchasing power took a hit. With rate of interest where it is, there is no reduction in 2024, people started paying more EMI because there is no relief on that, am I right? And hence, there was a need that we should be able to put more money in the hands of the taxpayer, who in turn either invest, that can come to the capital market, which help the capex cycle, or they consume, or happens both of that. And I think budget delivered on that. I'll go more detail about this, but it did deliver, and there's a thumbs up that has happened to this one. There's another thing which was there is that the slab rate within that income tax, there was a little uneven slab rate. 20 सीधा 30 पे जाता था. There was at 5, 10, 15, 20 and directly 20 to 30. There was an expectation that 25% slab rate should come up because then it ease out the tax liability. And number one, there was an unevenness between the two slab rates, in terms of there was a gap of 3 lakhs or 2 lakhs. Now every tax slab rate would be 4 lakhs difference. And of course, I'll come more in detail on that. So that has happened. So that's another good thing which has happened. But there was an expectation that Manrega, every working day, which you used to get 267 rupees, it can increase to 375 rupees. That was an expectation. It did not happen. In fact, there was no mention of Manrega in the entire speech, which normally used to happen in many budgets previously. But allocation remained the same. And when this finance minister did the media interaction, she mentioned that it's a need-based allocation. If required, we will increase the allocation and so on and so forth. So I think it's not cast in the stone that we are going to spend that kind of money only and not more or not less. So I think somewhere that has been given. But given the fact that there has been an inflation, one would have preferred this amount to go up from 267 rupees per day to little higher. If not 375 rupees, at least maybe to 300 rupees or so. If this has not happened this budget, maybe most likely it can happen in the next budget. If you read the economy survey, there was a loud and clear message which was released yesterday that a lot of savings are going from the bank FD towards equity and the mutual fund. Near about 11.5 crore in direct equity investors, unique equity investors. Don't get confused with the number of demat accounts, because someone can have more than one demat account. So that's why I'm talking unique investors. And near about 5.5 crore the unique investor in the mutual fund. And there was one concern that has been raised by the economy survey was that people basically, instead of putting money in the FD, they are putting money into the equity and the mutual fund, and could disturb the bank's ability to lend money, which in a way also impacts the growth in the economy. And there was expectation that government may come out with some amount of tax concession on the interest income on bank deposit. For example, if you put 5 years of bank FD, that interest you earn on that could be a tax-free kind of a stuff, That was an expectation. There's nothing like that has come, and I don't think it's going to ever come now. Why? Because government want to focus everyone to go to the new tax regime. And I think one of the biggest highlight of this year budget is that two things very loud and clear. One is that giving more money to the taxpayer in terms of tax rebate, and second thing, strong nudge. You need to go to the new tax regime. In other words, whatever the exemption that we have been claiming under ATC, ATD, and so on and so forth, or ATG, I think government want to. In fact, one of the government official in the press conference mentioned that they want everyone to go to the new regime, and the way this new regime has been introduced, it become more incentivized for people to go for the new regime. 75% of the taxpayer as of this year has gone for the new tax regime. Only 25% person like me are in a old tax regime, and even I don't know whether I need to now move to, it makes sense for me to move towards new tax regime or the old tax regime. I need to really figure it out. But my sense is that I'll continue to prefer with the old tax regime as of now. But of course, I'll definitely consult my chartered accountant. So, but what it did give some relief on the TDS front, especially on senior citizen. If you are earning more than 50,000 rupees, which was subject to TDS, which is now increased to 1 lakh and above. So there has been some relief. But going forward, do not expect any new tax concession. So when the market was expecting, someone from the trade body was expecting, this has not happened. I don't think it will ever happen now, because government want to do away with all kind of tax, relief to the taxpayer. I think they want people to have a simple kind of stuff. You earn income, this is the tax. Forget about tax exemption kind of stuff. There was another, because everyone knew that, we need to take care of employment, we need to increase manufacturing share in the GDP. There was expectation that some 15% kind of a new tax rate can come in only for the corporate who start new manufacturing facility, so that there is a tax concession available to them. Nothing of that sort of happened. But what budget tried to address is that ease of doing business. Rather than giving a tax concession of 15% or so, concessional tax benefit, I think it focus on more on ease of doing business, whether it's a manufacturing, whether it's service, whether it's anything. I think that was basically done. And I think some of the custom duties were also rationalized. The idea was to reduce and make India Atmanirbhar Bharat kind of stuff. So that's what has been done. But no tax concession was announced. One concern definitely, then one reason why RBI did not do the rate cut is the inflation. And of course, the food inflation was very, very high. I think that should subside. And if you go through the economy survey, you look at the body language of the finance minister and the complete government official when the media interaction, clearly that inflation likely to remain a little subdued going forward. There was an expectation, of course, this expectation was from CII, the trade body, which stated that, there is a 19.9 rupees excise duty on petrol and 15 rupees 80 paisa on diesel. One of the way to curtail the inflation is to reduce the excise duty, maybe 1 rupee or 2 rupee on petrol and diesel. Now, there will not be any impact on the government revenue. Why? Because on an average, there has been a growth in the consumption of petrol and diesel. So in absolute value, even if the government reduced by 1 or 2 rupees, still it would not impact its revenue. So it would be same as what it was last year, kind of a stuff. Of course, government did not give any concession there, but logically they should have given that. Why? Because it would have given a lot of relief to everyone, especially, of course, the 1 lakh crore which are going to forego by giving tax benefit. But here this would have been done. It increases India's competitiveness also. It also increases the manufacturing cost and other things, and logistic also, which in turn could have helped to pass on the benefit to the end customers. But unfortunately, that was not done. Maybe government since wanted to balance its revenue side also and reduce the fiscal deficit. This was not done. Having said that, there is a high probability if it is not done in this budget, there is a high probability it can be done in the next budget. Of course, there is a debate going on that whether we should bring petrol and diesel under GST or not. In case if that happens, then this move has no meaning then. But right now, it has not been done. We ask our customers through our WhatsApp channel how, and of course, this is not only our Markets Mojo customers, but also our employees who also participated in this what we call survey. What it says, our 42% of our Markets Mojo customers plus employees of Markets Mojo believe this budget is positive. And of course, you can put your comments also whether you find it positive in case you will not take participate in our survey. 51% said neutral. Only 8% of the customers said it's negative. I don't know whether your memory serves you or not, but we did some similar exercise in the month of July 2024 on the budget day. And at that point of time, if my memory serves me right, more than 80% were said negative budget. Why? There was a capital gain trick and so on and so forth. And of course, market did not do well. If you remember, what was my concluding remarks last time I made the presentation? Do not expect any significant gain from this level post-budget. And all, of course, this YouTube, it must be available, my last year budget presentation. You can go through that. And of course, I'll also comment how do I see market from here in the later part of my presentation. So negative. I think one good thing which has happened in this budget, and there was a big fear, that there will be tweak in the capital gain tax. Why? Because people thought that short-term capital gain can go up, long-term capital gain can go up, and so on and so forth. And somewhere the finance ministry also being of the opinion that we should not differentiate between different assets class also in terms of the capital gain. So two things: the rate of tax and the duration of who eligible, like what period of holding eligible to classify as a short term and the long term. And they wanted to bridge that anomaly by putting that. It has not come in this budget. That's a big relief. And it would have been suicidal, to be very honest with you, to tweak the capital gain tax or the increase in the STT, which has happened in the last budget. Why? Because the sentiments are really poor. And no finance minister would basically try to play with the fire, especially time when the sentiments are poor. Why should you do that kind of stuff? So that has not happened. I'm happy that has not happened. And that's one of the reasons I think the mood is either positive or neutral. Only 8% are negative at this point of time in the budget. Let's very quickly go through the budget highlights. So what are the key takeaways for me? I think I'm absolutely delighted that government did what it wanted to do, giving more money in the hands of the taxpayer. 1 lakh crore has been foregone. Now that's not a small amount. 1 lakh crore is not a small amount by any stretch of imagination. In other words, 8,000 crore every month for next 12 months would be additional money available to be spent by the population of this country, especially the taxpayer. 1 crore taxpayer who were paying zero tax from 7 to now they will to 12 lakh. Okay, 1 crore taxpayers are there. They will get the benefit of that. So they are going to either spend money or save money, which can help the economy to revive. And I think this is the biggest highlight of this budget. Unfortunately, I must tell you the way market reacted. Okay, it did not react too much because, as I told you, it was more like not a masala movie. It was more like an art movie. People don't understand this 12 lakh crore is going to be perpetual in the years to come. No government, if you look at the trajectory of the government after government, the income tax rate always has been on a downward glide path. It has never been moved up. I can't recollect in almost last 8-10 years, we have seen the increase in the income tax. Of course, there have been some increase in the surcharge, which basically impact the wealthy, but I can't remember. I'm so sure there are many chartered accountants in this webinar, so correct me if I'm getting wrong somewhere once my presentation get over. So this 12, the 1 lakh crore is a perpetual money which has been put by the government in the hands of the taxpayer. Remember, it's not 1 year impact, that's a perpetual impact. And that will help, the complete consumption basket. Today, in fact, if you look at it, the complete consumption basket moved up substantially up, and rightly so. If you go back to our equity outlook 2025, the one sector which was a contra bet for us was a FMCG. And one of the basic assumptions that we made whilst recommending FMCG was that government will give benefit to the taxpayer. And it did actually. And today, if you look at in 2025, one of the best performing sector is FMCG. And that trend can continue. I'll come to a little later because the food inflation is coming down, it's going to remain benign, and so on and so forth. I'll come to that. So that's, I think, the big highlights of this budget. Another good thing is that, government somewhere realized that India need to be Atmanirbhar not only in terms of other things, but also for pulses and other oil seeds. And I think a lot of focus has been given on oil seeds. If you remember, the palm oil price moved up substantially last year. Government is saying was not only we need to be self-sufficient in pulses, we need to be also self-sufficient in oil seeds. They are also focusing on horticulture. They are also focusing on creating a cold storage. They are also focusing on giving reasonable rate the interest to the farmers so that they get more succum in terms of this one. And of course, there are a lot of technology innovation. One urea plant will get set up in the Assam so that we have become self-sufficient even in the urea and it's 12 lakhs ton, if my memory serves me right, that's going to get set up this one. So I think that was nothing come as a surprise to me because agriculture always been the focus. In last 30 years of my budget analysis, not a single budget did not talk about agriculture. So I think that's. But one good thing is that it's not only it's a lip service. I think the government is basically focusing more and more on Atmanirbhar Bharat, and in fact, India could become an exporter of. It is actually, but become more and more active role in terms of export of foods, the agricultural produce, which can earn the forex for this country. I think one of the good key highlight is the ease of doing business, and I think it's a very, very critical. People need to understand the way they've done away with TCS, the way that it tax collected at source, the way they talk about TDS, the way they want to do decriminalize certain laws and so on and so forth. I think it not only encourages the local players, also encourages the foreign players to come in India. Like one of the budget speech, it talked about I'm forgetting the word that they call it, which has been announced so that becomes ease of doing business. They call it a very typical word that's there. I'm forgetting right now. I think that's another focus, and I think it is needed because when you want to move from developing economy to developed economy, we need to have a ease of doing business. Now, ease of doing business is again the benefits are not for 1 year. Sometimes we need to understand, is this benefit a temporary benefit or it's more of a structural benefit? And I think these are benefits which are more structural in nature, because once you do ease of doing business, then that benefit remains forever. No government would be stupid to make the life tough for the businesses. So once they've been focused on ease of doing business, that will continue, and that become a template for the future finance minister and future government to follow that, because we all seen the benefits of that happening. So I think that's been continued. That's a good thing. Another good thing is that increasing support to the startup ecosystem, and I think that's another feature. I think government do understand that if everyone is a job seeker, then it's a problem, and they want job seeker to become a job giver. It reduces the stress on the government to find otherwise unemployment can become a little bigger problem for them, right? So somewhere they talk about artificial intelligence also, 500 crore have been budgeted for that, research and development, so on and so forth, that has been done. And somewhere they want to also active participants and from the private players. I think that's where they want to focus more and more on that. EV, where some custom duty has been reduced on lithium-ion batteries and so on and so forth. The complete EV infrastructure and so forth, that has been physically focused, and that's rightly so, because the amount of fossil fuel this country consumes, basically we need to find a sustainable long-term solution to that. If you look at the gig workers. Near about 1 crore gig workers are there. That's what Finance Minister said in her budget speech. They will get benefit of the health scheme. Okay, and I think they do understand that the gig workers needs to come into the formal side of the business. They need to get the benefits of this, and there will be some portal where they will get registered. So that's another good thing, which will encourage more and more gig workers to come. So I think in a way, how do we basically resolve this unemployment problem? The gig workers by the likes of this tech companies, these gig workers are basically finding a decent job with the otherwise it could create more unemployment problems. I think somewhere it wants to encourage gig workers because that becomes life easy for government also to reduce the unemployment problem, and the demographic dividend does pay out into the economy. The major highlights, just for the benefit, of course, everyone must have flashed this, but I thought those who have not seen it. Earlier, there was 0 to 3 lakhs slab rate. Now it is 0 to 4. And now if you look at everything is 4 lakhs gap. 4 lakhs, 8 lakhs, 12 lakhs, 16 lakhs, 20 lakhs, 24 and about 24 lakhs. Here if you look at 0 to 3, then 3 to 7, 4 lakhs gap. Again 3 lakhs gap, 2 lakhs gap, and again 3 lakhs kind of a stuff which was there. So I think two things government did just to emphasize on. Now every slab of 4 lakhs there is a what we call new tax rate will get applicable. And this is the benefit. The new 25 slab rate has come. Now, what does this meaning? What does this mean actually? Let's look at. Now remember, just those who are little, there are two kind of tax slab rate, right? New and old. Old tax slab rate will remain as it is. There is no change in that. Okay. The change has happened only in the new tax regime. So if you are in an old tax regime, I think most probably, there is no change in that. So don't get confused with that. There's another confusion that people are having, that if finance minister is saying that if you have 12 lakh income, you don't have to pay any tax. But then how does one explain this? Because there is a tax rate of 5%, 10%, and so on and so forth. So what does it happen? Why? What is the confusion there? So let me explain you that in this slide actually, because that question has been raised by many people, and I thought let me just answer that question upfront. So suppose we were paying 8 lakhs, your income is 8 lakhs. In this financial year, you would pay 30,000 as a tax. Then in the new proposed, it's 20,000. But since you are saving 10,000, but there is a section 87A in the Income Tax Act which says that this 20,000 rebate you can still claim over and above that you are supposed to pay. Okay, and hence even if you are supposed to pay 20,000 tax, you need not pay any tax, and hence your total benefit comes out to 30,000, which you would have paid in 8 lakhs. Something similar to 99 lakhs, 10 lakhs, and up to 12 lakhs. So basically, if you are earning 12 lakhs, previously you were paying 80,000 in this financial year, which your current financial year. The next financial year, you did not pay any tax on that, despite the income tax slab rate said that you are supposed to pay, because section 87A suggests that we are not supposed to pay any tax on that. But if you are earning 16 lakhs, then this slab rate will come into play. Which tax slab rate? This slab rate will come into play. And so this is only applicable, this slab rate is only applicable those who are earning more than 12 lakhs. If you are earning less than 12 lakhs, you have to ignore 4 to 8 lakhs slab rate, you have to ignore 8 to 12 lakhs rate, because you don't have to pay any income tax rate, income tax in the new tax regime. I hope that's loud and clear. So this slab rate is only applicable those who are earning more than 12 lakhs per annum, person like me who has to pay. And suppose like if my income is 50 lakhs, it's more than that, just to give you this, but I will save 1.1 lakhs. So anyone basically earn more than 24 lakhs, basically their income tax saving is 1.1 lakh for the full year. In other words, 10,000 additional income has come to almost everyone by virtue of this new tax regime. Provided you are going for the new tax regime. I don't know whether I need to go for new tax regime or I will continue with the old tax regime based on the tax benefit that I can give. And government is foregoing 1 lakh crore. That 1 lakh crore would be available in the system to revive the economy, revive the consumption cycle. And I think that's a big step. And 1 crore taxpayer will pay no tax because they have 1 crore investor taxpayer from 7 to 12 lakhs bracket. Now we'll have to pay no tax on that new tax regime. So that's a big change. I hope where would the government is going to spend money on defense. There is an increase from 4.56 lakh crore to 4.91 lakh crore. There was a confusion that the defense budget has been come down. That has not been the case. So I think that's message is loud and clear. Rural development increased substantially, 1.9 lakh crore to 2.66 lakh crore. I think the rural economy is doing well. It will further do well. And I think one more statement which government made a statement, the finance minister made a statement in the parliament is that migration should be an option, should not be a forceful choice for the rural economy. And I think government wants to do that. Local people get job in the rural, in the local place. Maybe tourism is one way that they talk about, and so on and so forth. Which Home Affairs increased from 2.2 to 2.33. Agriculture and Allied increased 1.4 to 1.7 lakh crore. Education is another focus. Not only we are talking about the education, but the quality education 1.14 to 1.28 lakh crore. Health 88 to 98,000 crore, and urban development 63,000 crore to 96,770 crore. You know, the fiscal deficit is one number that everyone looks very closely. And fiscal deficit is a function of what kind of number assumptions you made to see the growth. So this financial year, the Indian economy is going to grow at 9.7% nominal GDP. What is nominal GDP? Inflation plus the GDP. Real GDP, am I right? So India is going to grow at 9.7% nominal GDP in this financial year, which will give us 324 lakh crore GDP numbers. And we talk about market cap GDP. So you know what is now market cap GDP number, because market cap ऊपर ले लो जो 400-450 lakh crore है, 425 lakh crore something, divided by 324 lakh crore, you get market GDP. So this year the GDP, nominal GDP is grow at 9.7%. The next financial year it is expected to grow at 10.1% nominal GDP. And when you look at the projections given by the FM in the budget, the corporation tax is going to grow at 10.4%, which is, I believe, is in line with the nominal GDP. Taxes on income, which grew at 20%, is going to grow at only 13.1%. One of the reason why slower growth, because of 1 lakh crore which has been foregone by giving the income tax benefit. Number one. Number two, I think government realized that the last year they made a lot of money in terms of the long-term, short-term capital gain may not be there in the FY 2026-20, FY 2025-26, and that's one of the reason could be taxes on income has been this one. Custom revenue projection has been 2.1, excise has been 3.9 purely because of service tax to 0, and GST has been assumed at 10.9 as very similar to the last year. So this revenue projection looks very reasonable. Doesn't look that government tried to inflate the revenue projection to reduce the fiscal deficit. So it looks very realistic at this point of time, keeping in mind what's happening at the subsidy remain almost very similar, whether you look at Manrega, whether you look at food subsidy has gone up by nearly 6,000 crore, which more or less fertilizer subsidy has come down, but government always basically fine-tune the subsidy based on what is happening. Fortunately, the input cost for the fertilizer has come down, and hence very high probability that we might basically not even use 1.67 lakh crore in FY 25-26 in terms of this one. Petrol subsidy 12,000. In overall subsidy, I think it's a very critical. We basically remain almost similar to what it was there last year. So when you look at the subsidy as a percent of GDP, it has further come down. Why? Because the amount remains same, but your the denominator will go up. Why? Because the GDP is going to grow by 10.1%. So for subsidy to GDP is further coming down, which is a very healthy sign. What used to happen previously, our subsidy bill used to go up, and because of subsidy bill used to go up, we could not spend on the productive side of the businesses, and which has happened. So if you look at, we used to spend 8 lakh crore in FY 2021, that was also impacted by the COVID, to be very honest with you, which came down to 4.69 lakh crore. If you look at it, I think is 5-6 years low in terms of subsidy bill. Of course, we used to spend a lot of money on petroleum subsidy because diesel was subsidized and so on and so forth. That money is now longer, that episode is no longer there now. Deficit, and I think this is very critical because market normally look at whether we are able to maintain the glide path of deficit. Why deficit is very, very critical? If your government is going to spend, if you have a higher deficit, that means government has to borrow to fund that deficit. In other words, it can basically crowd out the private sector and it could also be inflationary in the economy. 4.8% this financial year revised estimate for fiscal deficit, it has been brought down to 4.4. But going forward, I think government is talking about this government to debt, okay, debt to GDP. From 57.1, it wants to give it to 56.1. The government going forward want to focus more and more on not fiscal deficit as a number. Of course, they have not given any glide path going forward for fiscal deficit. But one thing they've given a glide path that how much government debt to GDP would be going forward. And I think they've gone in very detail in the FIBM document of the budget. I'll present that numbers. First, let me just cover on capex. Somewhere there is a misconception that government has basically reduced the capex. It has not reduced the capex. Let me tell you one thing. Okay, if you look at the capex this year, because of election, because of monsoon, and so on and so forth, government will end up spending near about 10 lakh crore or so, as compared to 11.11 lakh crore budgeted in the previous budget. From that, this year, that is next financial, they are projecting 11.2 lakh crore. So, which is almost 1 lakh crore additional money that government is going to spend on capex. This year, we don't have a general budget, a general election, sorry. And hence, there is a higher probability that money will get spent on the capital, on the capex. On the top of it, there will be state government which is going to do capex. And the ministry, finance ministry officer also talk about 4 lakh crore, another capex will be done by the CPSC. In other words, we are looking about, 20 lakh crore kind of a capex will spend by state, central and the CPSC in terms of capex in next financial year. So somewhere that, the doom and gloom kind of a scenario being presented by many experts, I think it's unwarranted. Okay, this is a combined debt to central and state GDP. It was 74.9. Pre-COVID went to 93.3 because of government had to give some support to the economy. It came down to 84.5 budgeted for 2024-25. And I think government is talking about that these numbers should keep coming down. So what they did, if you look at the central state to GDP ratio, which was 61.4, has come down to 56.1. 500 bips decline has come in last 4-5 years, and of course 57.1 will now come down to 56.1 for the budget estimate for FY 2026. But look at this these numbers. I don't think these numbers were ever presented by the government in the previous budgets. What it does is that it gives you what is the glide path of central debt to GDP ratio. It's a very important number, so please focus on this number because this will also decide what India rating could be and what could be the rate of interest, what could be inflation, and what kind of comfort level the foreign investors will have in the Indian economy. So if we do the, if you look at there are three line, mild, moderate, and high case, of the fiscal consolidation. If India is to grow at 10% GDP, the central debt to GDP would be, and let's look at the moderate, 50.6. If nominal growth grows, instead of 10%, we grow at 10.5%. This is data for next 6 years, 2030, 2031. Look at this number. We could be 49.7. And if nominal GDP grows at 11%, we could be at 48.8. I believe India would grow at 10% for next nominal GDP by next 6 years. In other words, there is a possibility we would be having central debt to GDP of anywhere between 49.3 to 52.2. Government has said that they want somewhere between 50% plus or minus 1. So basically they are saying 49 to 51 is what the kind of numbers they are talking about. And I think this is the one data going forward every economist and every market expert will look at very closely. Previously, it used to be fiscal deficit, and whenever there was a slippage on the fiscal deficit, market used to go down. I think going forward, the global as well as the local investors will look at, and I would request you people also to look at debt to GDP to understand in which direction Indian economy is going, and because of that, in which direction Indian equity market will move. This is a fiscal deficit glide path, so I don't want to spend more time on that. Let's look at where the rupee comes. I think I'll not spend much time on that, but I think if you look at it, the biggest, the revenue is basically come from borrowings, and then it followed by the income tax. The corporate tax only accounts for 17% and indirect tax only 18%. A lot of people have a misconception that GST is the highest revenue contributor for the government. The answer is no. Well, the government is going to spend just very, this the devolution to the state and this 22% and payment of interest is 20% are the bigger. This one, I think somewhere the debt to GDP also I'm talking about. We need to basically reduce this number, because if this number get reduced, then this money can go for more productive assets. What is the market impact because of this? The budget, when the budget speech started, market was in positive, and then hardly market moved in the green zone. In fact, it moved down, and by the time the budget speech ended, market was even negative, and almost at the same level it closed. So it did try to recover whatever the lost ground in between, but market did not sustain, and eventually market closed in the rate. What happened the budget day? Realty index moved up by 3.38%. One of the reasons could be that two houses now will not have that to pay the what we call, they call it some word actually. I'm not able to recollect that word. So two houses basically will have need not pay. The second house is exempted from something. I'm not able to. I'm forgetting that. If consumption basically did extremely well purely because of that 1 lakh crore kitty or the incentive which was given by way of income, and FMCG also 3. Auto did well because we assume that more money people will buy more of a small cap did better than the large cap, and mid cap was not this. The worst is CPSE index and the PSU bank index. Nifty 50, of course, consumption pattern did very well, and some of the PSU companies and some of the infra related companies did not did well in on today on the budget day on the Nifty 50. From budget to budget, last budget to this budget, almost everything is in red except Nifty, IT, Pharma, and only two sectors, IT and Pharma. Everyone else from last budget to this budget is in red. So you can understand what happened from last budget to this budget. Let's try to understand what should be a post-budget strategy. Nothing much changed for the investors post-budget. What was there in pre-budget, except that consumption-driven companies will do well. So if at all you have to now readjust your portfolio, focus on those companies who could benefit directly or indirectly as a part of the consumption basket. Remember that 1 lakh crore is not a small amount, and this is available year after year to the taxpayer, because this money will remain with them, and I think the benefits are there. So I think this money, so if you have to rebalance your portfolio, focus on a consumption theme. I know some expert coming and saying that consumption basket may not do well, competition, so on and so forth. I believe that two advantages is going to happen. One is that input costs are going to remain little benign because the crude oil prices remain benign, has gone down post Trump coming back because it's a drill baby drill. And second thing about the food inflation, other inflation is coming down, and that should basically help to reduce the input cost. On the other hand, your money is there, so more demand is there, and it's a double benefit, double bonanza that's going to come to the complete consumption basket. So my sense is it's not a one-day gain that consumption basket is having. I think this gain would be more durable in the years to come. I think second thing, government wants to focus on higher employment and higher income. That augurs well for the sector that are consumer facing. Next week, the new tax bill will get presented. Of course, it's not going to get implemented because it will get to the parliament, then there will be some the comments and so on and so forth. But somewhere, I think government is focusing on ease of doing business. So my sense is that you should also focus on those sectors which are right now are going through or basically victims of the heavy-handedness of the bureaucratic this one. I think they will see ease of doing business, and if they see that, probably a very high that you would see they doing better in terms of the performance. So that's the way you should look at it. Last time the budget, the values were very rich, and I said that the upside is limited, and that's exactly budget to budget data shows you. This time, fortunately, market has corrected significantly before the budget. Even today, market did not react positive to the budget announcement. So values has become quite reasonable, and in fact, we are very closer to the 10 years average in terms of price to earning for this. So my suggestion, advice to everyone would be every decline should be used as an increasing allocation to the equity, which I would not have recommended last time. Uh, uh, Normally, the markets go down post budget. This is 1 month, one month what we call movement of the indices, large cap, mid, and small cap. You see more red than the green. My sense is that this time that trend would get reversed. If I have to come again in front of you on 1st March 2025, probability is very high that indices would be green, especially on the large cap. Numbers are not as bad what people are talking about, and that's another reason I believe there is an upside to the market, and hence every dip should be used as an opportunity to add. Most probably on 7th Feb, when the RBI MPC meeting will announce a rate cut. If you look at it, quarter-on-quarter growth of 8.5%, YOY growth of 4.6%, that has happened with the India. In other words, the growths are there, growth in earning is there, market has come down, and due to that, the valuations are becoming more and more attractive. And hence, my request would be, of course, I don't expect too much rally in the mid and small cap, but I do believe within that pockets, within the mid and small cap, there are few companies which will do well, but large cap on an overall looks extremely promising to me. Let's open the floor for over to you, Jason.
Yeah, I'll just start off with this first question. We're getting a lot of questions this time.
Jason, my request, let's focus today
Yeah.
only on the budget related rather than discussing some other things.
Yes.
Yeah.
Okay, this one by Rajendra. GST is very high. Do you think the income tax upward revision will have a greater effect on the share market? It did not have any positive reaction today.
So even to be, if you ask me very honestly, I don't know why it has not. I think somewhere people got too much concerned with that there is no further capex, which was 11.11 lakh crore last budget, 11.2 lakh crore this budget. So there is no engagement. People do forget okay, what we are going to spend. There is a 10% increase on that. So I think that's one reason I believe little this. GST is very high. See, remember, I was discussing someone. The GST cannot come in it's a subject matter for budget. GST is a subject matter of a GST council. The way government is going about and doing ease of doing business, I can tell you one with a lot of confidence. I'm not privy to the GST council. We will see a lot of rationalization in the months to come, even with the GST. Because if you look at the way they are looking at the custom duty rate, only 7 rates, if my memory serves me right. Okay. So they are reducing the slab rates. So something very similar will happen in GST also, Rajendra sir. So I don't think that we need to get too much worry. In fact, we are on the right. See, I think what we need to understand is the direction right. And my sense is the direction is very much right. And once your direction is right, you will reach your destination. Whether you reach destination sooner or later, but you will reach the destination. That's more important for us. Am I right? So I think GST, yes, in some cases really high. And I think we will see rationalization of that in the coming months. I'm not asking you to wait for the next budget also. I think this government has taken a very send a message loud and clear. Ease of doing business. Look at where the tax structures are little counterproductive. Reduce that and revive the economy. I think that's the message loud and clear.
Okay. This question by Dr. Sarang. Should we exit infra-related stocks suggested by Mojo? As there's no focus of government in this budget, so they will become laggards.
So I don't know which Mojo infra stock markets Mojo has recommended to exit. I can't recollect, but they could be company specific. But if you ask me very, Dr. Sarang sir, if you look at the big theme, India is going to spend almost 20 lakh crore. Why 20 lakh crore? 11 crore by the central government, 3-4 lakh crore by the state government, and 4 lakh crore by the CPSA, Central Public Sector Unit, as a capex. It's not a small amount. So there is a growth. Other good thing is that input costs have become little less. And that we should not get out of the infra companies. In fact, if you go back to my presentation, Equity Outlook 2025, I said three sectors: private sector bank, FMCG, because I was expecting tax cuts, and number three, in a benign inflation, and number three, infra. Post budget, I'm not changing my view. I continue to believe infra as a sector should do extremely well. And for someone that doesn't do well, please remind me on 1st Feb 2026.
Okay, moving on to this next question by Mr. Parag. Like tax slab on individuals, the government should have tax slab on corporates also. So small businesses whose net profit are less can spend more on developing the new business. What's your view on this?
I think there are some concession being available within the corporate tax. I'm not able to recollect now, but if some chartered accountants are there on this, Parag Bhai, I think it's available. But yeah, you are right. I think it's available to the MSME sector and something of that, if my memory serves me right. But the irony is that today in this country is that the individual pay more tax as compared to the corporate. If you ask me very honestly, the corporate, why should the individual pay more tax as compared to but then the other argument, and second thing, what happens? So first thing, I buy your argument. It's not that I don't buy your argument. There is a merit in your argument, and I think government should do that. But I also want that we should bring the personal income tax and the corporate tax at the par. In fact, personal income should be much lower than the corporate tax. So if, for example, corporate tax is 25%, the maximum income tax should be 25%, not beyond that. But today, person like me end up paying more than much higher because you have a charge and whatnot, and effective tax rate goes in excess of 35% or so. So, and the corporate, like Reliance, will still pay 25%, which earns much higher than what I earn actually. Am I right? And still pay 25%, and I end up paying in excess of 35%. So I think somewhere that is needed. But I think your point well taken. I think government should look at the way, but I'm not really sure that is there in the other parts of the world. I do believe in some country like Germany or somewhere, there are different kind of a tax rate for the small size company and large cap. But I think it's a well taken. I think it's a good point actually, and I think finance minister should consider as a part of this. So we should not have too much slab rate, but this could be something which is 50 crore or so, and one which is above 50 crore kind of a stuff. That should something which we can definitely explore. It's a good suggestion, Parag Bhai.
Okay, moving on to this next question. Yeah, this is by Mr. Shah. If our country has to be a developed country by 2047, our GDP growth should be 8% every year from now till 2047. Is it possible?
So, if you ask me very honestly, it looks a little difficult. Okay, but I think that doesn't mean that we should not aspire to have a developed economy. If it doesn't happen by 247, we'll have by 2025. But eventually we'll reach the destination. See, somewhere we get too much, enamored by that this one. The fact is that India wants to be a developed economy. I think that aspiration is there. So whether we reach by 242, 4047 or 252, 2052, it's just a matter of time. But we will reach that. That's more important. So I think as I said, the direction is more important than the destination. Because if your direction is right, eventually we'll reach the destination. And I'm so sure. In fact, there's a beautiful article written by Prasad Jain in Economic Times some time back. And in fact, when I was doing a review with one of our PMS customers, I did send him that the article. And it says very simple. We will reach the destination, whether you reach by 247 or 2052 or 2055. But we at least will reach that. So I think but without 8%, it definitely looks difficult. And we are talking 8% real GDP, not the nominal GDP.
Okay. This next question, this is by Dharmesh. Has the government ignored the budget allocation for railway, infra, etc., or like roads and highways?
I don't think so. I again repeat, I think somewhere people got little misconception. 10 lakh crore this year we are going to spend on infra. We are going to spend 11.2 lakh crore the next year. 4 lakh crore is going to be spent by the CPSC on a capex, and plus the state government. So I don't think it has been ignored. And remember, Government is talking about what? Government want to decrease the logistic cost in this country, because China plus one strategy can never play out if you don't focus on infra, and railway is a part of that infra. So I don't think it is ignored. Has they not put the higher allocation? Maybe yes, but maybe for railway, but infra road and highways is definitely there. I don't think we need to worry too much or bleed too much about it. Yes, I do understand that railway companies have taken a huge beating today. Maybe the expectation a little high, but today morning I was in a CNBC and I was talking about that. The problem is that government has not been able to spend what has been budgeted last time. And if you go through the commentary of the railway companies, they are saying the contracts are not enough coming in. So I think what government, instead of putting high allocation, the key is to spend that allocation. Because as I was saying about the revenue projection, I can reduce the fiscal deficit by inflating the revenue projection. So it looks very good. And at the end of the year, we realize तुमने projection बहुत बड़ा किया था, हुआ नहीं, and fiscal deficit slip, which used to happen in the previous budget, which has not been the case. So I think government realized that whatever allocation we are doing, if we are good enough, if we are able to spend that, and that one could be the one reason, instead of basically allocating high and not able to spend money, they said might as well allocate only low and might as well spend that money. I think that's more sensible. That's how I look at it, Dharmesh ji.
Okay, we have next question by Mr. Amir. With the emphasis on renewable energy in India's latest budget, how significant is the government's expenditure commitment to this sector? And does it indicate a stable long-term policy direction? From an investment perspective, would holding on to stocks in renewable and green energy companies be a prudent move in the coming years?
Amir ji, I think the government is clearly committed to move to the renewable. And the reason is very loud and clear. Why? Because India can't afford to be so much dependent on fossil fuels, because it costs us a bomb. Am I right? We are making other countries rich by importing the fossil fuel. So I think not only this government, any government basically will focus on the renewable. And India has an advantage because we are in the right what we call place in terms of we have abundant what we call solar available to make it possible. So I don't think government is going to basically go over that. The EV, the renewable energy, the sale of renewable energy in the total capacity is all going to go. So I think it's going to this one. From investment perspective, I think one has to really very, very careful. Because when you go through some of the companies' announcement and see this industry development is happening very fast. And when I go through some of these companies' balance sheet and con call, somewhere I do get a sense that these companies are a little behind the curve in terms of the technology advancement. So will they be able to become a wealth creators? Looks little difficult. My worry would be that don't just blindly invest because it's a renewable energy space. I think you have to be a little more careful, go through the con call, go through the management pedigree, what amount of money they are spending on R&D, how much imports are there, will they, and so on and so forth. So your metrics to evaluate those companies are a little different as compared to normally you would do for other set of companies. So my sense is that while the overall outlook is good, I'm not very sure that each and every company within that space is going to make money for the investors.
Okay. This question by Ashok. Will export-oriented companies benefit or will they be impacted by the Trump tariffs?
I don't know sir, Trump is going to put any tariff or not. Till we don't have a clarity whether Mexico and Canada will have tariff. We don't know whether China will have a tariff. It was supposed to come from today. Unfortunately, I could not get myself updated because I was busy with the budget understanding and so on and so forth. So we need to wait and watch. Will export-oriented company will benefit? There is no specific measure which has come, to the best of my knowledge, in the budget, which basically says that it will benefit export-oriented companies. So I think I think you need to look at purely based on the each individual company's business model. There is nothing specific which I can recollect which has only come for the export-oriented companies. So I don't think there is a thing. And budget tariff, Trump tariff impact, I think we need to wait and watch what he's going to do, how he's going to do, in what manner he's going to do. We don't know, in fact. And when, there is a debate going on, even if there is a import tariff being imposed on the Canada, and the Mexico, will that include crude oil or not, and kind of a stuff. So I think it's not going to be a blanket. It's going to be more specific. And second thing, we remember, if someone impose a tariff, you also can retaliate by doing, this. So Canada has also given a threaten. Then in case if they do it, there are certain products which will also basically put a tariff. The goods coming from the US to the Canada, which may not be the happy scenario. So somewhere I think that's a scenario we need to wait and watch what's happening there in terms of the tariff.
Okay. This question by Pramod. After a budget, what's your view on the hotel sector?
So I think hotel sector, there is a demand-supply mismatch, and I would request everyone to go to a very nice presentation done by Indian Hotels when they declare the December numbers. And it's all available in the public domain. And they gave a very beautiful chart. What is the demand for the hotels going forward? What is the supply? And when you look at that, there's a demand-supply gap is there. This government basically wants to focus more and more on tourism, okay, because it generates employment, local employment, so that reduces the pressure on the urban economy. It also gets a lot of forex for us because the foreign tourists coming in, and they also talk about visa free and visa on arrival and so on and so forth. That benefits the hotel companies. So I think the view on the hotel remains extremely positive. It's a continuation of what was announced at the last budget. I think that's continued in this budget. Of course, not too much has been spoken about it, but if you look at the underlying theme, it's very loud and clear. And they also talk about the Buddha tourism circuit that's also been promoted, purely keeping in mind some of the Buddhist tourists. So I think it's a move in the right direction. Hotel companies should do extremely well. Again, and if you look at the occupancy rate, which has gone up, even if you look at the revenue per available room, that has also gone up. It's a win-win situation. When your occupancy rate goes up and even your rate on that higher occupancy also goes up, it basically have a multiplier effect on your top line and the bottom line.
Okay. Question by Rohan. So after the small dip in the market, then the budget happened. And do you think the momentum investing will be preferable this year?
I doubt, sir. Rohan sir, the year 2023 and 2024 was a year for momentum. I don't think this year is for the momentum. I think this year to be more sensible, more selective in terms of your stock selection, what you get into, what price you get into. So don't try to make mistake because you may believe what worked in 2024 will work in 2025. It's not going to work. I think we need to, and that's why I keep saying time and again, the amount of money investors made in 2023 and 2024, they will be good if they were able to preserve what they made. Many of you would lose money. In fact, I met many investors who candidly enough to admit to me that the money they made in 2024, they got wiped out in 2025 in the first month itself. So I think the message is loud and clear. You did well. Time is now for you to hand over that gain to the professional. Because otherwise, if you try to do the same thing, what you did in 2024, you will miserably fail. And then don't blame that market because you need to blame yourself because you did not learn what market was trying to explain to you.
Okay. I'll just move to this next question by Mr. Rakmi. Hi, Sunil. If we have to check from the relief provided sectors like rural development or home affairs sector, which stock we have in the market and how to check these in the screener. I was trying to run the screener first time after being a member. After 4 to 5 years, I didn't find the option to run the screener for the stocks in manufacturing industry. Also, one more question is, which sector do you think will thrive?
So let me answer the easiest part first. The sector which will thrive is definitely consumption. I think it's loud and clear. 1 lakh crore is not a small amount by any stretch of imagination. So whether it's an FMCG, whether it's a consumer durable, whether it's a auto, whether it's anything which you look at, which basically it's a B2C business. I think they will basically, and once they do well, they also depend on some B2B players. Am I right? So it's basically a virtuous cycle it creates. So in a way, a lot of companies which are consumer facing will definitely get a lot of benefits of that, and they should do well. In terms of screener, I don't think so that we have a screener specific to the budget. So that's not that. But in terms of manufacturing, manufacturing is a big sector, sir. So we don't have basically classified. We have certain subsectors within that where you can run a screener, and if you want, you can add those screeners as a part of manufacture. Then you can run a bunch of sectors. You select those sectors and then run a whatever screener you want to run. But we don't have a specific the sector as a manufacturing. I think you need to keep clubbing it as a then and you can run it. So it will be summation of some of the subsectors within the manufacturer that you club it and then run a screener, whatever screener you want to run, and you will get the output. But that is not a function of budget. Let me tell you one thing. In Markets Mojo, our IP is completely, it's a completely blind to what's happening outside. Okay, it doesn't understand any outside noise. Our IP just understands data, and data. Because what has come in the budget eventually will reflect in the market, and eventually it will get captured in our IP. That's how our IP works, Lakshmi ji.
Okay, Mr. Sunil, that's with the Q&A session.
So
today.
we don't have questions. In the interest of the time, we are saying no more questions.
Yeah, in the interest of the time, if possible, I can pick up a few more questions, Mr. Sunil.
Please take last 5 questions if you don't mind.
Sure. This question by Mr. Ravindra. With increase in income tax slab and government's push to move new tax regime, investing in insurance to get reduction is not attractive to individuals. Should we exit equity investment in insurance companies like LIC, HDFC Insurance, etc.?
So I don't want to give company specific reply. But try to understand, I said 75% of the investors anyway moved to the new tax regime. In other words, and I'm talking about that last year, the FY 2023-24, which has filed return in assessment year 2024-25. Has the premium gone down in this financial year? The answer is no. So somewhere you need to basically make a sense. I don't know. Sometimes some news channel talks rubbish actually, and that creates a lot of problem. If you look at today, some of the insurance company, they went down and then again recovered that kind of a price movement. So people have become very. So there are a couple of things you must remember that. People first thing have understood that insurance is a necessity. It is not a tax-saving instrument. It is a necessity. And I think somewhere post-COVID it has become all the more pronounced in the people's mind that it's a necessity. So I don't think because direction is not there, तो कल last year भी नहीं था ना भाई. 75% of the customer, investor, taxpayer did not opt for that. That's what the data from the income tax that the Ministry of Finance is giving that data. तो वो हिस्सा में क्या change हो गया? In fact, the 75 will become 100. So I don't think the people are now basically taking insurance scheme because it's a tax incentive. People are taking because it's a necessity for them. Whether it's a mediclaim, whether it's a life insurance, because people realize that how uncertain life has become, and if you are not there, you don't want your family to suffer or just standard of living coming down. So I don't think there is a correlation between the new tax regime and the insurance. Had that been the case, there should not be growth in the gross the insurance premium in last 1 year. Because everyone went for the new tax regime. So I don't see a logical conclusion there, and hence I would not be surprised insurance turns out to be one of the best wealth creating sector for next 5 years. I don't want to name companies, but I'm very optimistic because the penetration of insurance in India is still very, very low. And there's a huge scope for that penetration to increase. If you look at some of the emerging markets, if you look at some of the developed market, I think that's there. And I don't know whether in the developed market they have a tax incentive. So I think please remove that notion, the tax benefit and the necessity. When it is necessity, whether it's available or not available tax benefit bracket, you'll still go for that.
Okay. Moving to this next question by Mandar. Gold duty hiked in budget by 1%. Could you please advise on this?
Mandar sir, I think I missed that part. I'm not able to recollect whether it's been hiked by 1% or not. So sorry, I am not updated on that. Please excuse. Maybe next time when I come, maybe on Tuesday I'm again in front of you people. Maybe I'll look at it and I'll come back to you. But I'm not very sure this has been done. But if it is done, then it's missed my attention.
Okay, this next question by Sridhar. What would be the reaction of FIIs Will they come back in March 25 as you predicted?
I'm very sure, sir. Sridhar sir, what is negative for them? Tell me one thing. Okay, is there some provision in the budget which deter them to come to India? The answer is no. They've sold near about 1.75 lakh crore in last 4 months. This kind of selling cannot sustain. I don't know what the data is today. Has it come? I don't know. The data has come on FPI, but I'm very sure they will come back. Again, I go back to my prediction of equity outlook 2025. FPI in 2025 would be anywhere net inflow of anywhere between 50,000 to 1 lakh crore, despite heavy selling taken place in January of about 70,000 crore. So in other words, we should expect in next 11 months minimum more 1 lakh crore in net investment coming from the FPI.
Okay, this next question by Sunberg. If I understand correctly, CPSE will be having a good additional capex this year. So market response today seems overdone. What's your opinion?
I agree with you, sir. 4 lakh crore is going to be spent by the CPSE in FY 2026 as a capex. See, there's one more thing, you people should always look at it. Which sector did extremely well on budget day last year? क्या हुआ उसके बाद उसका? And the same way, the sector which did not perform well last year, same time on the budget time, how it performed, till this budget. So you'll see this. Sometimes market overreact too much. I remember one thing, and one of this, the anchor of a business channel many years back, I'm talking about. Some announcement had come in the something to with the banking sector, and this guy said, this sector is now going to do extremely well. The sector did well on that day, and post that company and that the sector came down drastically badly. I don't want to name the anchor. I don't want to name the company, but that's what has happened. So unfortunately, that the anchor has been actually banned by SEBI also now. So that's what happens actually. So sometimes market basically overreact to something without understanding the true numbers. And we are also in a way a trigger happy kind of a scenario. We want instant gratification everywhere. So if some news came, we want to react to it without understanding whether this news is positive, neutral, or negative. And we basically react like this. You are right. I agree with you. It's overdone.
Yes, Mr. Sunil, that's with the Q&A session for today.
Okay. We have done with the first 5 questions. Sorry, I did not realize that. So thanks a lot everyone taking time out and attending this webinar. Again, I'll be in front of you on Tuesday with a Q&A with Sunil Damane. Some interesting data will come in front of you. I did look at the economy survey and I'll take some interesting data. I did not want to take this data today because my presentation would have become more longer. But economy survey is a very interesting data to talk about it. I've gone through that. I'll discuss with you all. See you on Tuesday. But of course, I think on Monday, Jason will be there with the stock of the week. Am I right, Jason?
Yes.
Okay. So see you on Monday with Jason and Tuesday with me. Good night. Take care.
Yeah, thanks a lot everyone for attending today's event. Before I conclude the event, just in case you're not actually extended your plan or subscribed, we're closing the offers very soon and you can take a 1699 offer for 3 years. The link is just below the video and we'll also be sending you a mail with this. Yeah, thank you everyone.